Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 136, recorded here on October 6, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. Alrighty, well, we'll start with the market update and outlook, then get into the week's Bitcoin news, and then we'll wrap up with a highlight of this week's featured post on Bitcoin Fortress Substack. A lot of articles lately that I've been writing on mining. All right, jumping right into the news. Wall Street's benchmark S&P 500 index on Friday eked out a weekly gain while also posting a 4-week win streak for the first time since mid-May. Sentiment was subdued for most of the week as traders kept a close eye on the escalating situation in the Middle East. However, a blowout jobs report on Friday provided a much-needed boost to the mood and helped the S&P 500 eventually end the week in the green. So, translation, good news is good news now. On Tuesday, geopolitics were thrust into the spotlight after Iran launched about 200 missiles at Israel in retaliation for the killing of Hezbollah leader Hassan Nasrallah. The situation continued to grab eyeballs, especially on Thursday amid expectations for an Israeli response. WTI crude oil futures surged more than 9% for the week, while the S&P 500 energy sector was the best performing sector of the week. No surprise there. At home, a massive strike of dock workers at U.S. ports in the East and Gulf Coast, the first since 1977, grabbed eyeballs. The strike eventually lasted 3 days until the International Longshoremen's Association and the union representing the port workers reached a new tentative agreement. Friday's non-farm payrolls report showed the addition of 254,000 jobs in the U.S. in September, significantly higher than the 132,500 consensus. The data pointed to strong hiring in the labor market and led to investors dialing back their expectations for a large 50 basis point interest rate cut by the Federal Reserve in November to 0. For the week, the S&P 500 added 0.2%, while the Nasdaq Composite gained 0.1%. The blue chip Dow also rose 0.1%. Looking ahead, the main economic data release out next week will be the September CPI report. Economists expect the core inflation rate to hold steady at 0.3% year over year, if you believe the government's numbers, and to be up 0.3% on a month-over-month basis. The general expectation is that the CPI print will not be weak or strong enough to affect the size of the next Fed cut. Investors will also have the Producer Price Index report and the preliminary University of Michigan Consumer Survey for October to digest. As for the Federal Reserve calendar, the release of FOMC minutes from the September meeting and a full slate of Federal Reserve members' speeches could give clues as to what to expect at the November meeting. The event schedule for the week ahead is dominated by AI events for NVIDIA, AMD, and Hewlett-Packard Enterprise. The Q3 earnings season will also kick off with Delta Airlines, PepsiCo, and JP Morgan Chase, some of the big names due to report. The developments in the Middle East will be of high interest to oil traders again. Moving on to Bitcoin news, we'll start with Good Morning Bitcoin. This one was from Thursday, October 3rd, 2024. That was the last one that they did. From No BS Bitcoin. So, what's happening? OpenSats has announced the long-term support for Dusty Demon, recognizing his pivotal role in developing Lightning Network specifications and designing and implementing splicing. With this support, Dusty will expand the splicing implementation throughout the Lightning ecosystem and begin developing Splice script. And just so you know what splicing is, it used to be you had to close your channel in order to increase or decrease the amount of funding that you put into it. Splicing allows you to increase or decrease the size of your channel without having to close it out. That's about as technical as I get on that. Nigeria sues traders over unlicensed USDT and Naira trades. The Nigerian government has filed lawsuits against 4 traders and several firms for operating without authorization in the autonomous foreign exchange market. They are accused of publicly negotiating USDT to Naira exchange rates, thereby violating Section 291C of the Foreign Exchange Monitoring and Miscellaneous Provisions Act, which criminalizes any foreign exchange negotiations that are not legally permitted. They're trying to play with the Ponzi there, see? No free markets. Proton Management denies Swan Bitcoin accusations. In a written response filed on Monday, Proton Management denied allegations made by Swan Bitcoin asserting that Swan never engaged in a genuine mining business. Rather, Proton stated, as Swan admits in their complaint and publicly, what Swan has called its mining business is really just a separate entity called 2040 Energy, which is fully funded by Tether. Proton Management has also requested the dismissal of the case. The Miner Mag has published an unredacted version of the original lawsuit by Swan Bitcoin. It originally hid details indicating that Tether controlled the board of directors of the joint venture. Telegram updates transparency report. In 2024, Telegram responded to over a dozen U.S. law enforcement data requests, potentially revealing the IP addresses or phone numbers of more than 100 users, reports 404 Media. Pavel Durov added that his company has been disclosing user information since 2018. Chat control removed from EU Council agenda this week. Despite the removal, a spokesman for the EU Council stated that Hungary continues to actively hold talks with all member states. Consequently, the proposed regulation could be reintroduced to the agenda at any time in the near future. And finally, search and rescue operation by North Carolina Bitcoin community. North Carolina's Bitcoin community is launching a search and rescue mission on October 4th to support western areas affected by Hurricane Helen. These areas have received limited state and federal assistance, and the community aims to provide much needed support. The organizers are accepting donations in both Bitcoin and fiat. And there is a QR code as well as a link in the article if you're interested in donating. Next up, Hodler's Digest from Cointelegraph for the week September 29th to October 4th. We'll see what they have to say and try to skip the shitcoins unless it's entertaining. Documentary filmmaker Cullen Hoback and HBO recently announced the debut of their upcoming film Money Electric, The Bitcoin Mystery, along with hinting that the true identity of Bitcoin creator Satoshi Nakamoto may finally be revealed. Cullen Hoback is perhaps best known for his HBO miniseries Q, Into the Storm, wherein he claims to have identified several of the authors of the QAnon conspiracy theory. In his latest endeavor, Hoback investigated the origins of Bitcoin in what appears to be an attempt to track down the true identity of the engineer known as Satoshi Nakamoto, who is credited with inventing Bitcoin and the underlying technology that makes it possible. A few of you might have discovered why I disappeared. Well, I was tracking down someone else who disappeared. Curious who's behind Bitcoin? Money Electric, The Bitcoin Mystery drops next Tuesday. It's going to be a roller coaster, Hoback said in a post on X announcing the documentary. And there's another article that I came across on this as well that I will go over later. Banks in North America, Europe, and Asia are preparing to participate in trials involving digital assets by the Society for Worldwide Interbank Financial Telecommunication, or SWIFT. SWIFT announced on October 3rd that it will begin digital asset trials on its network in 2025. The trials will involve experiments with transactions that include multiple digital currencies and assets. The trials aim to explore how the banking network can provide financial institutions with unified access to multiple digital asset classes and currencies. Initial use cases will focus on payments, foreign exchange, securities, and trade to enable multi-ledger delivery versus payment and payment versus payment transactions, the announcement said. So sounds like the banks want to get in on the game to make some money, perhaps exert some control over the decentralized but really centralized shitcoin universe. The United States, the strong United States September jobs report signals a possible slowdown in interest rate cuts, but is still bullish for Bitcoin as investors warm to riskier assets, Zach Pandel, Grayscale's head of research, told Cointelegraph. Conversation about Fed rate cuts and debate about larger government deficits continue alongside solid economic growth, which should be net positive for investors' risk appetite and may reintroduce inflation risk in the medium term, Pandel said. Grayscale Research expects Bitcoin to benefit in this risk-positive environment, he explained. The U.S. economy gained approximately 254,000 jobs in September, far ahead of economists' expectation of some 140,000 new jobs, according to the U.S. Bureau of Labor Statistics, if you believe those numbers. That was me. I added that. Spot Bitcoin prices moved to an intraday high of more than $62,300 on October 4th, following the stronger than expected jobs data. Let's see. The FTX estate is preparing to auction off approximately 22 million WorldCoin tokens, valued at roughly $38 million, on October 3rd, a source familiar with the matter told Cointelegraph. Investor bids had to be submitted by October 3rd, with a minimum bid of $2.5 million to qualify for the auction, and the tokens could sell at a steep discount of up to 75%. Cointelegraph also learned that the tokens are subject to a 4-year unlocking period ending in 2028. Approximately 20,000 WLD tokens will unlock daily beginning on December 1st, 2024. The unlocking schedule will then slow to roughly 14,000 WLD tokens per day from July 2026 until it concludes in 2028. So, yeah, good luck with that shitcoin. Let's see. What else do we have here? More shitcoinery. FUD of the week. Here we go. Actually, I have some better FUD later on that I'll be going over later in the podcast, but this is, we'll get started with this. The third quarter saw the smallest losses from hacks that the industry has seen in the last 3 years, according to a report by cybersecurity company Hacken. About $460 million was stolen across 28 incidents. Still, the recovery rate was the lowest in recent years at only 5%. Hacken breaks down this data along with the broader state of Web3 security in Q3. It also discusses major types of attacks, the most affected project categories, and strategies for mitigation. Exploits of access control mechanisms accounted for $316 million, or almost 70% of the total funds stolen in crypto hacks in Q3. The perpetrators of such attacks gain control over the keys that control smart contracts. Once in control of the keys, they can withdraw funds from the contract to their own wallets or upgrade the proxy contract implementation to activate the withdrawal function. A provincial Vietnam police force arrested 5 individuals connected to an elaborate crypto scam network led by offshore bad actors, according to local media reports. On October 4th, police from Nghe An, a Vietnamese province bordering Laos and the Gulf of Tonkin, dismantled a Laos-based scam ring linked to fraudulent wire transfers. The scammers were led by offshore individuals specializing in pig butchering, a long-term investment fraud scam in which the victim is coerced into making escalating contributions to the perpetrator and crypto investment scams. The Nghe An police apprehended 2 Vietnamese suspects after investigating and confirming direct links to the crypto scams. According to the report, one of the scammers visited Laos in September 2023 to join the gang of fraudsters. In February, they began creating Facebook accounts to trick victims into investment scams. The shitcoining. It just never stops. Scammers gonna scam. The cryptocurrency market faces significant risks due to overvaluation and the centralization of token ownership, according to a recent report from Binance. The report warns that if these challenges are not addressed, these risks could undermine the long-term stability and integrity of the crypto industry. Speaking with Cointelegraph, a Binance spokesperson explained that as more participants enter the market, There's a greater emphasis on valuation and responsible financial management. They continued, our report underscores the critical role of decentralized control and transparency in fund usage to foster long-term trust. Projects that adopt these principles are better positioned to gain market confidence and achieve sustainable growth. Or you could just buy Bitcoin. Okay, next up is from CoinDesk. This was posted on October 4th, and a little bit deeper dive into the HBO documentary that's coming up. HBO is joining search for Bitcoin Satoshi. Past attempts haven't turned out great. HBO says it knows who Satoshi is. The television network is releasing a documentary, Money Electric, the Bitcoin Mystery, on Tuesday, with the claim that it will unveil the true identity of Satoshi Nakamoto, the pseudonymous creator of Bitcoin. The documentary is directed by investigative filmmaker Colin Hoback, who made a name for himself unmasking the leader of the QAnon conspiracy theory as 8kun site administrator Ron Watkins in a 2021 documentary series for HBO. Watkins later denied being Q, but two separate linguistic studies found that he was after taking the mantle from South African computer programmer Paul Ferber. If Hoback really has the investigative chops to sniff out Satoshi's true identity too, it would put an end to a mystery as old as Bitcoin itself. But past efforts by investigative journalists to find the true identity of Satoshi have failed. In 2014, Newsweek journalist Leah McGrath Goodman published a story called The Face Behind Bitcoin, identifying a California-based Japanese-American man named Dorian Satoshi Nakamoto as the creator of Bitcoin. But Dorian Nakamoto denied he'd ever heard of Bitcoin and categorically denied being its creator. Goodman's story was then thoroughly debunked by other journalists. But he did get a meal ticket, so he did get a free lunch. So at least it turned out good for him. The following year, tech publication Wired published a now heavily updated article suggesting that Australian computer scientist Craig Wright could be the inventor of Bitcoin. After the article came out, Wright went on a media blitz telling publications like the BBC, The Economist, and GQ that he was Satoshi. But it didn't take long for Wright's story to begin unraveling, and it became clear that Wright, who has a history of questionable business dealings and behavior, was making the whole thing up, likely as a cover for his still ongoing issues with the Australian Tax Office, as well as to make money and a name for himself by copywriting the Bitcoin white paper. Wright also went on a lawsuit spree, suing Bitcoin developers and the family of a former collaborator in an effort to gain court-ordered access to Satoshi's trove of untouched 1.1 million Bitcoin, which he claimed to have lost access to by stomping on the hard drive that contained his private keys. He also sued and threatened to sue anyone who suggested that he was a fraud, including podcaster Peter McCormick and former public school teacher Magnus Granath, aka Hodler. But Wright was in fact a fraud, according to a UK court that definitively ruled earlier this year that Wright was not Satoshi Nakamoto and ordered Wright to publicly post admissions he was not the creator of Bitcoin on both his website and social media accounts. Wright has pledged to his ever-dwindling number of supporters to appeal the decision. Wary of another public failure, the media has until now been reticent to publicly name another Satoshi candidate, and in the meantime, the crypto industry itself has largely come to a consensus that the identity of Satoshi is better left a mystery. American crypto exchange Coinbase even cited the unmasking of Satoshi as a potential business risk in its S1 prospectus filed ahead of going public. But that doesn't mean that the public's curiosity over the true identity of Satoshi has abated. There have been convincing arguments made that any one of a number of early cypherpunks could be the creator of Bitcoin. Some of the most commonly suggested Satoshi potentials are computer programmer Hal Finney, who died in 2014 and lived near Dorian Satoshi Nakamoto, BitGold creator Nick Szabo, Hashcash developer Adam Back, and B-Money creator Wei Dai. All of them have denied being Satoshi. Less common theories point to former programmer and criminal cartel boss Paul LaRue, who is currently in prison, or the Central Intelligence Agency. Still others believe Satoshi was not an individual, but a group of coders working together. Among polymarket bettors, 46% have put their money on another candidate, computer programmer and cypherpunk Len Sassaman, who killed himself in 2011 shortly after Satoshi stopped posting on BTC Talk, an early forum for crypto discussions. Galaxy Digital's Alex Thorne posted on X that if Sassaman was indeed identified as Satoshi in the HBO documentary, it would be neutral to positive for Bitcoin, given that Sassaman has since died. If Satoshi is still alive and has access to the 1.1 million Bitcoin tied to him, her, them, if that stockpile were ever sold, that could, in theory, crater the asset's price. Like Finney, Szabo, Back, and the others, there have been convincing arguments made that Sassaman could be Satoshi. A convincing argument, however, is not the same thing as proof. Though the new HBO documentary teases never-before-seen clues, the real smoking gun would be the movement of Satoshi's coins, something that no claimant has been able to do. If Satoshi is dead or unwilling to go public, even to access the treasure trove of Bitcoins worth roughly $68 billion at today's value, that proof may never come. Next up is from Bitcoin Magazine. This was posted on September 27th and is an update on Tornado Cash. So Tornado Cash loses motion to dismiss. The judge in the Tornado Cash case delivered an oral ruling today, rejecting both the defense's motion to compel discovery and their motion to dismiss the charges. This represents a massive setback for the defense, and the judge's reasoning may not bode well for developers and projects going forward. The defense's motion to compel discovery sought to access a broad range of government communications, including exchanges with foreign authorities under the Mutual Legal Assistance Treaty and with domestic agencies like the Office of Foreign Assets Control and the Financial Crimes Enforcement Network. Citing Federal Rule of Criminal Procedure 16, the defense argued that these materials were essential to understanding the government's case and could potentially include exculpatory evidence. The judge, however, made it clear that Rule 16 imposes a stringent requirement. The defense must show that the requested information is material to their case, not merely speculate on its potential usefulness. The court dismissed the defense's arguments as speculative, noting that references to what the information might or could reveal do not meet the necessary standard for materiality. For example, the defense argued that MLAT communications with the Dutch government might shed light on the evidence against Tornado Cash or reveal the government's investigative theories. The judge found this reasoning unpersuasive, emphasizing that materiality cannot be established through conjecture or vague assertions. The court similarly rejected the defense's request for all communications between the government and OFAC and FinCEN, although the defense claimed these documents were necessary to understand the government's theories and potential witnesses. The judge concluded that the defense failed to demonstrate how these communications were directly relevant to the charges at hand. The court reiterated that the burden is on the defense to show a specific link between the requested documents and their defense strategy, a burden they did not meet. When the defense suggested as an in-camera review, a private examination by the judge of the requested documents to determine their materiality, the court refused. The judge argued that granting such a request based on speculative assertions would set a dangerous precedent, effectively forcing in-camera reviews in all criminal cases when a defendant speculates about the relevance of certain documents. This, the judge stressed, would undermine the purpose of Rule 16 and transform the pretrial discovery process into an unrestrained search for potentially helpful evidence. The defense also raised concerns under Brady versus Maryland, arguing that the government might be withholding exculpatory or impeachable evidence. While the court acknowledged the government's obligations under Brady, it found no indication that these duties had been neglected. Without concrete evidence suggesting the government was withholding information, the court saw no reason to compel additional disclosures. The judge cautioned that while the defense's arguments were theoretically possible, they lacked the factual support needed to warrant the court's intervention. She did say, however, that if she later finds that the government has interpreted its obligations too narrowly, then there will be unfortunate consequences for their case. The motion to dismiss presented a much more significant set of issues. Central to the defense's argument was the definition of a money transmitter under the Bank Secrecy Act. The defense contended that Tornado Cash did not qualify as a money transmitter because it did not exercise control over users' funds. It merely facilitated the movement of cryptocurrencies. The court, however, rejected this narrow interpretation. The judge clarified that the BSA's scope does not require the control of the funds. Tornado Cash's role in facilitating, anonymizing, and transferring cryptocurrency was sufficient to bring it within the statute's ambit. The judge likened Tornado Cash to custodial mixers, which had been deemed money transmitting businesses. Further complicating the defense's argument was their reliance on the 2019 FinCEN guidance, which uses a four-factor test to determine whether a wallet provider is a money transmitter. The defense claimed this guidance, which includes a total independent control standard, should apply to Tornado Cash. The court disagreed, stating that this standard is specific to wallet providers and does not extend to mixers like Tornado Cash. Consequently, Tornado Cash's lack of total independent control over funds was irrelevant to its classification as a money transmitter. Another key point in the court's analysis was the distinction between expressive and functional code under the First Amendment. The defense argued that prosecuting Storm for his involvement with Tornado Cash was tantamount to punishing him for writing code, which they claimed was protected speech. The judge acknowledged that while code can be considered expressive, the specific use of code to facilitate illegal activities, such as money laundering or sanctions evasion, falls outside the bounds of First Amendment protection. The judge emphasized that the court must focus on the conduct enabled by the code, not merely the code itself. Even under intermediate scrutiny, which applies to content-neutral restrictions on speech, the judge found that the government's interest in preventing money laundering and regulating unlicensed money transmission justified the restrictions imposed by the relevant statutes. The court also addressed concerns about the immutability of Tornado Cash's smart contracts, an issue raised by both parties. The judge acknowledged the existence of a factual dispute, but noted that it was not a decisive factor in the current motion. However, the issue of immutability may play a role at trial in determining the extent of Storm's control over the service and his responsibility for its operations. In concluding remarks, the judge underscored that while the use of code to communicate ideas may be protected under the First Amendment, using that code to facilitate illegal activities is not. This distinction is critical in the context of emerging technologies like blockchain, where the line between speech and conduct can be blurred. The court's ruling serves as a reminder that the legal system is prepared to hold participants in the digital economy accountable, even as it grapples with the complexities of applying traditional legal principles to new and evolving technologies. The full transcript of the ruling will be released once prepared by the court reporter. So quite interesting to follow this case. It has pretty major implications on the regulation of I guess privacy and tools that have been developed to try to provide people with privacy. And of course, that gets criminalized. And just the notion that that you could be a money transmitter when you don't control the funds is on its face seems a little bit ridiculous to me. So we will have to watch that one carefully. Next up from Crypto Potato. This was updated on today, October 6th. Cash, not crypto, remains preferred tool for criminals. Oh, how about that? In the debate over illicit finance, cryptocurrencies often bear the brunt of criticism despite cash being the preferred tool for criminals. A new report published by Homeland Security Investigations Supervisory Special Agent Robert Whitaker and the Crypto ISAC states that regulated crypto platforms offer valuable support to law enforcement, utilizing blockchain's transparency to combat crime and boost national security, despite lingering misconceptions about their role in illicit finance. The share of illicit activity within the total cryptocurrency transaction volume is remarkably small. According to the report, Merkle Science's analysis shows that only 0.61% of USDT transactions between July 2021 and June 2024 were flagged as potentially illicit, while USDC fared even better, with just 0.22% flagged and less than 0.005% linked to sanctioned entities. Meanwhile, Chainalysis reported that illicit activities accounted for only 0.34% of total on-chain transactions in 2023, down from 0.42% in 2022. These figures are much lower than the estimated illicit activity in traditional finance, as highlighted by the Treasury's 2024 National Money Laundering Risk Assessment. Both cryptocurrency and traditional finance systems face increasing regulatory scrutiny to combat illicit finance. However, they differ in their transparency. TradFi lacks the public blockchain technology that makes crypto transactions traceable. In traditional finance, law enforcement must obtain financial records from institutions, often requiring a grand jury subpoena. This process involves a panel of people and gathering substantial evidence before tracing funds can begin. Additionally, many illicit activities still rely on cash, which is untraceable. The 2024 DEA report confirms that cash remains the primary method for transactions in the drug trade due to its anonymity and lack of a paper trail. In the report, Agent Whitaker said that the traceability of transactions on a blockchain is a game changer for law enforcement and regulatory bodies in their fight against cash-based illicit crimes such as money laundering, terrorist financing, and other forms of financial crime, since it offers the capacity to follow the money in real time and across borders. This is done through something called Know Your Transaction, or KYT tools, to track down criminals. While traditional finance relies on Know Your Customer processes, KYT uses blockchain's transparency to provide real-time insights into transactions. This enables crypto companies and agencies to assess risks continuously and adds a layer of security unmatched by traditional systems, including a safer platform for users. The report highlighted that integrating KYT with traditional compliance tools could potentially help create a more robust risk assessment framework, continuously updating based on new blockchain data to stay ahead of emerging threats. KYT is also said to improve sanctions compliance by enabling exchanges to screen and block transactions linked to high-risk addresses identified by bodies like the Office of Foreign Assets Control and member-led organizations like Crypto ISAC. So this would suggest that there's a lot of criminal activity occurring in crypto, and yet it's just interesting how they want to treat everybody like a potential criminal and crack down on privacy and privacy tools and the ability to use these for the average person. So once again, the 99.6% are made to suffer for the 0.4% under the purview of the administrative state. Speaking of the administrative state, this is FUD of the week. This is from Bitcoin News, was published on October 5th. IMF criticizes El Salvador's Bitcoin strategy, urges reconsideration. Again, the International Monetary Fund has been vocal about its concerns regarding El Salvador's adoption of Bitcoin as legal tender, consistently advising the Central American nation to scale back its Bitcoin policies. Since El Salvador made history in 2021 by becoming the first country in the world to adopt Bitcoin as legal tender, the IMF has expressed reservations about the economic and regulatory risks associated with this move. Despite these warnings, El Salvador continues to push forward with its Bitcoin strategy, with President Nayib Bukele showing no signs of backing down. During a press conference on October 3rd, 2024, Julie Kozak, director of the IMF's communications department, reiterated the organization's stance. She stated, "What we have recommended is a narrowing of the scope of the Bitcoin law, strengthening the regulatory framework and oversight of the Bitcoin ecosystem, and limiting public sector exposure to Bitcoin." The IMF has made it clear that while it respects El Salvador's decision to embrace Bitcoin, it believes the country needs to tighten its regulations to minimize potential risks. The IMF's latest remarks come after a similar call for reform earlier in August. While the IMF acknowledged that some of the predicted risks of adopting Bitcoin have not yet materialized, they remain cautious. The organization believes that the current regulatory framework surrounding Bitcoin in El Salvador is too broad and lacks the necessary oversight to ensure the country's financial stability in the long term. On October 4th, Juan Carlos Reyes, the president of the National Commission on Digital Assets in El Salvador, revealed that lawmakers in the country had approved significant amendments to the CNAD law. These updates empower the CNAD to oversee Bitcoin businesses, making it the main regulatory authority for the country's Bitcoin sector. Additionally, it will establish a risk-based framework to enhance El Salvador's position in digital asset regulation and adoption. Reyes stated, "Our team will combine regulatory knowledge with practical Bitcoin experience, ensuring a balanced and effective approach." In a related update, the National Bitcoin Office within the Office of the President of El Salvador announced that the nation is working on establishing new capital markets centered around the leading digital asset. The ONBTC highlighted, "Only on Bitcoin can an individual ever self-custody their wealth and property. Capital will never form upon chains designed for velocity rather than sovereignty." One of the primary reasons behind the IMF's concern is the exposure of El Salvador's public sector to Bitcoin. The IMF has consistently urged the country to step away from its reliance on Bitcoin and instead adopt a more traditional financial infrastructure, i.e., buy U.S. treasuries. While Bitcoin is often seen as an alternative to the traditional fiat currency system, especially for countries with struggling economies, the IMF argues that it could expose El Salvador to financial instability. Since Bitcoin's legal adoption, El Salvador's GDP growth has hovered around 3%, a figure the IMF views as modest but not sufficient to outweigh the potential risk posed by this strategy. The country's outstanding loans, estimated at $144 million, also play a part in the IMF's push for a regulatory overhaul. The organization believes that Bitcoin's volatile nature could complicate El Salvador's ability to manage its debt and finances. At present, it possesses 5,892 Bitcoin, which is approximately valued at $365 million based on the current market price. While President Bukele and his administration remain committed to their Bitcoin strategy, not everyone in the country is convinced. Speaking to Time magazine in August 2024, Bukele admitted that the adoption of Bitcoin is not as widespread as he had expected, but his government left it as a free choice for the Salvadoran people. Bukele had initially hoped that the country's citizens would enthusiastically embrace the new currency, but uptake has been smaller than anticipated, probably because they coming from the government, and why trust the government? Despite this, Bukele has made it clear that he will not force Bitcoin adoption on his people, stressing that it remains a voluntary option. This pragmatic stance has allowed Salvadorans the freedom to choose whether they want to adopt Bitcoin or stick with the US dollar or the country's other legal tender. The IMF's concerns about Bitcoin are not limited to El Salvador. Globally, the organization has expressed skepticism about decentralized digital assets, particularly Bitcoin. In recent years, the IMF has worked with other nations such as Andorra and Pakistan to develop frameworks for monitoring and taxing digital asset transactions. The organization has also floated ideas such as taxing the energy consumption used for Bitcoin mining, arguing that this could help reduce carbon emissions, a growing concern among climate activists who believe Bitcoin mining is becoming a troubling issue. At the same time, while the IMF opposes decentralized digital assets like Bitcoin, it is promoting central bank digital currencies. In September, the IMF launched the READY framework to help central banks around the world implement CBDCs. The framework focuses on regulation, education, design, and incentives, aiming to make digital currencies more appealing to the public while maintaining control in the hands of governments. Despite the IMF's ongoing pressure, President Bukele remains steadfast in his vision for El Salvador. Under his leadership, the country has launched several high-profile projects aimed at integrating Bitcoin into its economy. These include initiatives like Bitcoin Beach and the ambitious Volcano Bond, which aims to fund Bitcoin mining using the country's abundant geothermal energy from its volcanoes. Bukele's popularity, both at home and abroad, has surged as a result of his bold policies. Domestically, his leadership has seen improvements in public safety and a stronger economy. Internationally, he's become a polarizing figure, drawing both praise and criticism for his unorthodox approach to governance. Bukele has often clashed with international institutions like the IMF and Western nations, positioning himself as a defiant leader who champions the sovereignty of his country. This isn't the IMF's first warning to El Salvador. In August, the organization issued a similar caution stating that while many of the risks have not yet materialized, there's joint recognition that further efforts are needed to enhance transparency and mitigate potential fiscal and financial stability risks from the Bitcoin project. The IMF also emphasized that additional discussions in this and other key areas remain necessary. As El Salvador continues its experiment with Bitcoin, the world watches closely. The IMF's warnings reflect broader concerns in the international community about the risks of embracing a volatile and decentralized asset like Bitcoin as legal tender. However, the results of President Bukele's initiatives have been positive so far. JP Morgan, in a recent report, increased the country's growth forecast to 3.9%. President Bukele and his supporters argue that Bitcoin offers El Salvador a path to financial independence and innovation, particularly in a world where traditional fiat currencies are facing increasing challenges. In the coming years, the outcome of El Salvador's Bitcoin experiment could have far-reaching implications not just for the country, but for the global financial landscape. While the IMF's calls for reform are unlikely to disappear, Bukele's administration seems determined to stay the course. And I'm with him. The IMF just wants to keep him under their thumb, and they do that with debt, and that's what they do all around the world. Here's some loans, now you owe us money, now you do what we say. It's the new way of colonialism. It's neo-colonialism at its best. So I say keep fighting the good fight there. Next up, Bitcoin.com news. This was updated today. Now we're going to move into some happier news. Bitcoin transfer volumes soar in 2024, set to break 2023's record in 2 weeks. 2024 has seen new milestones for Bitcoin as the crypto asset hit its all-time price high. The hash rate reached a peak, the difficulty climbed to unprecedented levels, and the daily transfer volumes also hit record highs. The 5 busiest days for transfers in Bitcoin's history occurred this year, with the highest on April 23rd, 2024. On that day, miners confirmed 927,010 transfers, marking a new peak. More recently, the network saw its second highest day with 910,083 transactions on September 8th. The third busiest day in 2024 landed on July 21st with 859,629 transactions, closely followed by May 26th, when Bitcoin miners confirmed 852,655 transactions. Not far behind, July 23rd took the 5th spot this year with 838,977 transactions whizzing through the blockchain. Flashback to Bitcoin's early days, and things were much quieter. In 2009, Bitcoin's debut year, the most active day was December 18th, when Satoshi and a handful of miners confirmed a grand total of 225 transactions. By 2010, the network was picking up speed. That year's peak day, November 21st, saw miners verifying 10,044 transfers, a giant leap from the previous year. From 2009 to 2017, transaction volumes climbed steadily year over year. Take June 14, 2011, for instance, miners confirmed 14,158 transactions, setting a new high for the year and outdoing the 2010 record. Then, almost exactly a year later, on June 14, 2012, miners smashed a new record for the year, verifying 61,938 transactions that day. Metrics reveal that 2018 didn't outshine 2017, and the record of 490,644 transactions on December 14, 2017 held strong until 2023. That year's peak arrived on December 31st when miners confirmed a whopping 731,351 transactions in a single day. As it stands, 2023 still holds the crown for the most transactions in a year, with 153 million 415,993 transfers confirmed. Fast forward to 2024, and by October 6th, 145,225,680 transactions have already been processed. At the current pace, the record could fall in about 2 weeks, making 2024 a guarantee to surpass 2023. As Bitcoin continues to surpass previous records, the network's growth trajectory is evident, with 2024 already setting new benchmarks. However, Bitcoin's current throughput rate of 8.94 transactions per second is notably slow compared to Visa and MasterCard in the TradFi sector. Additionally, Bitcoin's TPS rate lags behind alternative blockchains in terms of scalability, highlighting ongoing challenges faces ahead as it evolves, although that's why second layer solutions are being developed to allow for faster transactions that are even more private. But still, you love to see this growth. This is really good news, and it'll be interesting to see where 2024 ends in terms of the transaction volume. But clear, and there's some nice charts in the article. I'll include a link in the show notes. You can check it out. Clearly showing tremendous momentum and adoption. So love to see it. And then last, Uptober builds strength as Bitcoin held on exchanges falls to 6-year low. This was posted on October 4th and was on Cointelegraph. Bitcoin moved to an intraday high of $62,338 on October 4th as stronger than expected jobs data for September and bullish on-chain metrics added tailwinds to the idea of a rally in quarter four. Bitcoin's price action occurred as September's U.S. non-farm payrolls print came in at 254,000, significantly higher than the expected 147,000. The unemployment rate slid to 4.1% from 4.2% in September versus forecasts for 4.2%. As a result, market participants have begun pricing in a whopping 97% possibility of a 25 basis point interest rate cut at the Federal Reserve's next meeting on November 7th, following an aggressive half-point move in September, as per data from CME Group's FedWatch tool. Another possible driver behind the idea of an Uptober and a fourth quarter rally for Bitcoin is the continued decrease in Bitcoin held on centralized exchanges. Data from CryptoQuant suggests there are over 2.8 million BTC in total on centralized exchanges, the lowest number since November 2018, and 500,000 less than the amount seen in March. Bitcoin reserve on exchanges indicates the number of BTC coins held in known exchange wallets. A low balance shows a decreased amount of available liquidity, and in some scenarios is followed by bullish price movements. The data shows that the balance on exchanges has plunged by 12% in the past 6 months, while Bitcoin has been stuck in a wide range, stretching from 50,000 to 72,000. The drop in balances is relatively similar to that seen between March 2020 and November 2020 before Bitcoin embarked on an extended rally to the 2021 high of 69,000. If history repeats itself, the declining Bitcoin reserve on exchanges could be a precursor to Bitcoin price rising to new record highs. Another possible headwind for Bitcoin as Q4 unfolds is increasing institutional demand through the US-based spot Bitcoin ETFs. Additional data from CryptoQuant reveals that institutional investors went from selling a net 5,000 Bitcoin on September 2nd to buying an average of 7,000 Bitcoin by the end of September. This is the highest daily purchase of these investment products since July 21st, when net buying was above 9,000 Bitcoin. This demand boosted Bitcoin prices to current all-time high of 73,835 in Q1 2024. Before embarking on the much-awaited Q4 rally, crypto analyst Timothy Peterson believes Bitcoin price may first drop to rest the adoption curve at 57,000. And that pretty much wraps it up. There's some good charts in this article as well. So again, I'll put a link in the show notes and you can check that out. Finally, I wanted to highlight this week's featured post on Bitcoin Fortress Substack. Articles entitled Galaxy Research 2024 Bitcoin Mining Mid-Year Report Recap, The Rise of the Gigawatt. And I've been writing recently about Bitcoin mining, and my next articles coming up on Monday that you might want to check out on the BitAxe home Bitcoin mining setup that I recently got myself, and I'm having fun with that. So check that out. Subscription's free on Substack, and if you like it, you can become a paid subscriber too. Always appreciate that. So with that, I'd like to thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack. It's at bitcoinfortress.substack.com, and you can also follow me on Nostr. My pub key is included in the show notes, so you can find me easily on there. And with that, I will talk to y'all next week. Bye-bye.